All right, welcome back to Talk Tickers. Today, we're tackling Vertiv's latest earnings report for Q3 2025. And let me tell you, this one was a wild ride. The company put up some absolutely stellar numbers, but the way the stock reacted, well, that's a whole different story. Kind of baffling, actually. So let's get into it and figure out what's really going on. So let's just start with a number that really jumps off the page, $1.24. That was their adjusted earnings per share. Now, you have to understand, this wasn't just a beat. This was an absolute demolition of what Wall Street was expecting. We're talking a nearly 25% beat. To borrow a phrase from their executive chairman, Dave Cote, who said it best on the call, they simply blew the doors off of every single metric. Just incredible. So you're probably asking, what's fueling this fire? Well, look no further than this number right here, a plus 60%, 60 year-over-year jump in organic orders. And folks, this isn't just a nice little bump in growth. This is a sign of massive acceleration. It all comes back to AI, right? These new data centers are basically power-hungry furnaces, and they need Vertiv's specialized power and cooling systems to even function. The 60% figure, it's the smoke signal that tells you a huge AI-driven wave is building. Okay, let's dig into the details. We're calling this a blowout quarter for a reason, and once you get under the hood, you'll see just how strong this performance really was. All right, just look at these numbers. This wasn't a case of them beating on one thing and missing on another. No, this was a clean sweep. You see revenue up 29%, blowing past expectations. Adjusted operating profit, that jumped an incredible 43%. And maybe most importantly, look at the margin. That expanded all the way to 22.3%. That's what we call operating leverage, and it's a beautiful thing. It just means that for every new dollar of sales they bring in, way more of it is dropping straight to the bottom line as profit. They're becoming more efficient as they get bigger. And this chart really puts that EPS beat into perspective. I mean, just look at the gap between what Wall Street thought they would do and what they actually did. That is a massive difference. This is the kind of surprise that 9 times out of 10 sends a stock into orbit. It's a crystal clear sign that the company isn't just riding a growth wave, they are executing at an incredibly high level. Okay, but the good news doesn't stop with the headline numbers. Let's look under the hood. Their book-to-bill ratio was 1.4. Now, what does that mean? It's simple. For every dollar of equipment they shipped out the door, they booked $1.40 in new orders. That's how you get a backlog that explodes to $9.5 billion. Think about that. That gives them a clear line of sight on their business well into 2026. And no surprise, the Americas, which is ground zero for the AI boom, was on fire, up 43%. And they're not just booking orders, they're turning it into cold, hard cash. Free cash flow was up 38%. All of this screams one thing. This demand is real, and it's here to stay. So, with a quarter like that in their back pocket, you can bet management was feeling pretty good. And that confidence really came through in their outlook. I think this quote from Dave Cote really sums up their entire mindset right now. He said, "I'm more confident than ever that we're in the early stages of what I believe will be a multi-year period of significant growth." Let that sink in. They're not talking about a good quarter or even a good year. They're talking about a multi-year transformation. They truly believe they are at the very beginning of a massive long-term cycle driven by AI. And look, talk is cheap, right? But Vertiv backed it up with a huge guidance raise for the full year. They bumped their adjusted EPS forecast up to $4.10. They're now expecting over $10 billion in sales and to generate a whopping $1.5 billion in free cash flow. The key takeaway here is pretty simple. They're telling the market that incredible quarter you just saw, yeah, that wasn't a fluke. Get ready for more. So, digging into the call, we got a better sense of their playbook. It's all about AI demand, first and foremost. They're pouring money into building out more capacity, especially in the Americas, just to keep up. At the same time, they're not ignoring other areas. They're working on fixing a softer European market and are actively getting ahead of any potential tariff issues. Oh, and that little acquisition of Waylay? That's a smart strategic move to beef up their software offerings, making their hardware even stickier. Okay, so let's recap. We have a monster quarter, a huge guidance raise. Management is overflowing with confidence. You'd think the stock would have an absolutely epic day, right? Champagne corks popping everywhere? Well, that is not what happened. And this is where the story takes a really weird turn. It really is the million-dollar question, isn't it? If everything was so perfect, why on earth did the stock end the day in the red? Just look at this roller coaster of a day. The morning started out great. The stock was up 4, even 5% before the market even opened. Then, during the call, it spiked all the way up to almost $192 a share. And then, the fade began. a slow, painful drift lower all afternoon until it finally closed the day down nearly 2%. It's what traders call a nasty reversal, and it really is a head-scratcher. So how do we make sense of this? It's like a tale of two competing stories. In one corner, you have the fundamentals, which are frankly spectacular. But in the other corner, you have these, let's call them nagging concerns. You can't forget that the stock has had a monster run-up this year, so some profit-taking was probably inevitable. And even though management tried to calm fears, some traders are still worried about things like future tariffs or that temporary weakness in Europe. So for at least one day, it looks like the market decided to focus on the few small clouds in the distance instead of the brilliant blue sky right overhead. So that brings us to the big finish, the next call. We've seen the great results, and we've seen the weird market reaction. Let's put it all together and give you our official take on what happens next. All right, here's the Talk Tickers thesis, broken down into 3 key points. 1, we fully expect Vertiv to meet and likely beat their own strong Q4 guidance. That $9.5 billion backlog is basically a safety net, and the AI demand isn't slowing down. 2, the stock price. You should probably brace for some near-term choppiness. The stock has run a long way, and the market needs time to digest it. But, and this is a big but, the fundamental story is just so powerful we think it creates a solid floor under the price. And that leads to number 3. Our official rating is outperform. The big picture multi-year AI infrastructure story is as strong as ever. So in our view, any weakness you see from this profit-taking, well, we see that as a clear buying opportunity for long-term investors. And as always, remember, this is not financial advice.